Well, hello everyone. Welcome to Getting Started with Technical Analysis. We are talking about price patterns today, and specifically we are talking about flags. Now, if I'd had another 15 seconds, I would have grabbed my American flag as well, or if I had the ability to pick this up and take you on tour, I'd take you into the room over here where there's a big framed Canadian flag and then an even bigger framed American flag. We're going to talk about bull flags and bear flags. And I don't have a flag with a bull on it and a bear on it, but if I see one of these days, I will pick them up for my little prop shop here. And we're going to look at, when we look at a flag pattern, how can we use that to make more informed trading decisions with respect to when we get in, when we get out, what a target might be, what an exit might be, all of those good things. So today we're talking flags, my friends. If you are not following me on X, you are missing out. I have posted a whole bunch of charts today. So you'll want to go and check those out. My handle at Barb Armstrong CS. And Brent Moores is with us in the chat. He's a friend and fellow coach. And he's one of those coaches that, you know, and I've been doing this now since 2011. As most of you know, I'm a student of this education and became a coach in 2016, but he's one of these guys that I just continue to learn stuff from all the time. And I reposted something that Brent had done on just a really easy way to see all the stocks that are trading above the 50-day moving average. Maybe we'll look at that today too, just, you know, throw in a little extra there. But he's posting great content, so go and check him out too. It's at Brent Moores CS. And just know that but, you know, we will never reach out to you and offer you a Bitcoin or a crypto deal, or we won't offer to trade your account on your behalf if you give us your password. Please never do that. These are not the real Brent, the real Barbs. These are thieves and scammers, so beware. Yeah. But having said that, let's get right down to business. So know that, you know, we're going to look at a lot of charts today, but know that that's all for general information purposes and shouldn't be construed as a recommendation. We will do a couple of example trades as well. And, you know, our focus here is on technical analysis, right? This is called Getting Started with Technical Analysis. But, you know, that doesn't mean that including fundamental analysis, being aware of earnings season and what's going on, you know, that might impact the markets within our country and the world. Tariffs come to mind so far in 2025 is an obvious thing to mention. Our example trades will be put on the Paper Money software platform on the Thinkorswim desktop. So, you know, if your version of Thinkorswim looks different, you're probably not using desktop. You might be on web. But, you know, it's free to download, so it's just another resource you can use. Yeah. Yeah, so somebody's saying it would be great to get a tool to stop the spammers and the scammers. And, you know, I posted something, which is kind of ironic, saying, you know, beware, here's another, you know, scammer, another ne'er-do-well, and then a bunch of spammers responded to my scammer post. So if you find such a tool, Riceberg, please let me know, and I'll be the first in line to sign up for that tool. That's for sure. Okay, so we are you know, clipping along through. This is my second time through with this this class, which I just started teaching recently, and today we're on lesson number 5. We're talking about flags. And so, you know, if you want to see what's up next week we'll be talking about pennants and triangle patterns, and then we're going to go to channels and reversal patterns. That would be, you know, the inverted, that would be the inverted head and shoulders patterns, and I've posted a couple of those today, or the head and shoulders patterns. So, you know, we'll be talking about those. This is kind of, if you're bullish, a happier occasion, you know, or double bottoms. You can see I had one, I was posting stuff on Twitter, you know, it was a double bottom on something that hasn't quite broken out yet on Twitter. So if you want to see which one that was, I think it was maybe Lily, Allstate, I'm not sure. Anyway, go have a look. Yeah. So we're kind of clipping along through. And then, you know, at the end, I may add another couple. We did one on diagonal resistance breakouts the last go through. We also did one that was dedicated just to Fibonacci, so we may do that as well. Okay. And kind of the goal is, as you go through these, to just be able to recognize these more quickly on your own. And so today, of course, it's Flag Day. Sorry, thought I had my drawing tool up again. You know, given that it is Flag Day, so we can all fly our own flags. We're going to discuss, you know, what makes a flag pattern a flag pattern. We're going to go out and look at a number of different examples, and then we're going to place some trades. I think, you know, it's one thing to identify a pattern, but it's another thing to have an idea of what to do with it. And I think that the way that we learn is by doing. You know, you don't say to a baby, sit down, I'm going to show you how to walk. You demonstrate for them every day, and then, you know, they pick themselves up and they kind of stagger around, you know, the edge of the couch or, you know, an ottoman or something like that. And then they, you know, do 2 steps and fall. And before you know it, they're running around all over. And it's the same when we learn anything, right? Yeah. Okay. So today we're on the flag bus. Okay, and with any price pattern, you know, there's a formation, and you know, there's some type of support, there's some type of resistance that we're going to see, you know, and that's part of almost any pattern, and a flag is no different. So if we see a bullish flag, we have something comes up here that's coming up, and then it hits a resistance level, and then it pulls back for a few days, and then it establishes a new what? A new support level. You know, and on the downside, if something's been falling, then it tries to come back up. So it hits a support level, tries to rally, hits a resistance level, and then it continues on down. And with this one, continues on up. Okay, and so each pattern, whether it's a bull flag or a bear flag, it has some type of unique construction that, you know, we see, and it can be over any given time frame. We look at a chart over a 5-year time frame, and we can look at a 1-day time frame. And, you know, typically we're looking at a 3-month, a 6-month, a 9-month, a 12-month, 1-day chart in this class, but you can look at it over multiple time frames. Okay. And you know, what do we use these for? Well, sometimes we're using this for an entry signal, and we'll talk about what that might be, and then also for an exit signal. Okay. And flags are, you know, great tools for all of these entry signals, exit signals, swing targets, or more of a trend target. And we'll discuss those specifically, these targets, as they pertain to flags. Okay. Let me shake my Etch-a-Sketch here. Did any of you guys ever have an Etch-a-Sketch? Or are you too young to even know what they are? Remember those silver things, little dials? And I mean, now we have all these pads you can just draw on with your finger or a stylus. I mean, it's pretty amazing where technology has come. So this is a bull flag. And, you know, this is a bullish pattern. And, you know, if it's a short term, it's going to take days to weeks. If you're looking at it over a longer term, you know, it could be weeks to months. And this initial, what we're going to call the initial move, this move here, you know, we call that the flag pole. And then when it pulls back, or sometimes if it goes sideways, I tend to call that, and it wasn't me that invented it, somebody else made it up and I just copied it. If it kind of goes more sideways, we call that kind of a bull flag in a stiff wind. But, you know, it pulls back for a few days, and then it continues, the uptrend continues. And what we're looking for is a close above the high of the low day to say, okay, now this pullback is complete. We had a resistance level form here. We had a support level form here when we had this bullish engulfing pattern. And, you know, we had this come down and then it kind of went sideways. We didn't end up with a close above that high of that low day. And then it fell again. And here we had our close above the high of the low day. We call that a hold in trader speak. Just if you want to get out your English trader speak dictionary. And this, you know, you may also draw a line here and say, you know, it's a break of a resistance or that hold. And you can make your entry whatever you define it to be, but these are two common ones. And so two types of targets are common. The first one is the previous high, and we would call that a swing target. So if you traded, if this could be your first target, target 1, and we'd call that a swing target. And then if you say, well, I'm going to make my target equivalent to the length of the flag. And so if this is, and that would be a flagpole target. So you might say, if this went from a low here up to the top was 10, then I'm going to go from this low here, even though I'm not getting in here. Make no mistake, this isn't where we're entering, but where we're measuring from, we would say, you know, here's our measurement is 10. And that would be another target. Okay, so those are two common potential targets, is the swing and then the length of the flag pole. And then the pole, I'm going to just put it, the pole target. Okay. So for a hold in this example, NK is saying, it looks like the low is the previous red bar, but does that always have to be the case that they are right next to each other? Typically, yes. Like for this to be called a bearish engulfing pattern, it's the candle on this day has to totally engulf the candle from the previous day. And in fact, this particular bar is so strong that it's engulfing the previous 3 days bodies of the, you know, it's the body of this candle engulfs the body of that candle. And if you would like a short video on that, let me just bring up the Trader Talks channel. Now, if you've not subscribed to the Trader Talks channel, first of all, I'm not sure why not, but just hit that button in the bottom right corner. If you've already subscribed, don't hit that button or you'll unsubscribe. But when you get here, what you'll see, and this is just another free resource for you to take advantage of, but when you get here, what you'll see is whatever's currently being taught or what's up next. If you come to playlists, and I've just recorded 2 short mini sessions on the bullish engulfing and the bearish engulfing pattern. And so if you come to these mini sessions, this is where it's easiest to find that series. So here's the bullish engulfing pattern, which is the pattern we're talking about on this example. And then I did a bearish engulfing pattern also, like they're 2-3 minutes long. None of them are more than 5. And we'll end up with about 18 of these. These are also posted in the Getting Started with Technical Analysis series. Okay, and then when we do our example trades today, just know that there are also a bunch of example trading plans. There's this, you know, a simple stock investing trading plan that we did based on a class I taught about a month or a month and a half ago in Getting Started with Technical Analysis. There's also, a Getting Started with Technical Analysis playlist, so you can always go there and look for resources also. But I just thought I'd bring that up. Okay, now the bearer flag is the opposite, in that we still have a flagpole and we still have a flag, as you can see here, but this is, a downtrending pattern. They wouldn't be found under shorts. They'd be found under the trade management mini sessions, and they'd be found under the trading, Getting Started with Technical Analysis. That's where those shorts are. They aren't under the short section. Sorry to be confusing about that. I'm not in charge of the filing system, although I do have some influence, I will say, on those mini sessions. So here's our poll. And again, if this is 10 from top to bottom, then the way we might measure the next target is to say, hey, if this goes 10. Now, if this in fact didn't go 10 and then we had this big bullish candle, might we choose to exit the position? Absolutely. But the target would be 10. So that's one target. And then a swing target would be the second one. And in this case is what was the previous low before it bounced. So this would be the swing target, if we're looking at targets. And of course, here is our poll. And here is our flag. And in this one, we're not looking for a close above, we're looking for a close below the low of the high day. And that is a possible entry. Okay. Or you could say a break of support. And, in this instance, what would the break of support be? Well, here, if we're drawing this line and considering this to be a support, well, this would be our break of support. It's also the day we had the close below the low of the high day. Fancy that. So sometimes they can be lows below. Okay. And sometimes people will call that a cablode. Yeah. I'm just trying to stay up with the questions in the chat. Okay, so that's that one. And, it's pretty straightforward, right? Like, it looks like easy peasy lemon squeezy when we look at this on these examples. And all I can tell you is sometimes the charts are littered with flags. Like, everywhere you look, it's a flag. It's like it's what all the cool kids are doing. Like, for the last couple of weeks, diagonal resistance breakouts everywhere you want to look. So which candle makes this a cablode? Well, if we look at this one, so it came down here. Whoops. So here was our, I can't zone in on it because I'm not on an actual chart. We'll look at these on some actual charts as well. Somebody's asking, so here, this particular candle here is our high day. Okay. And so when we're looking for a close below the low of the high day, that would have happened the next day. This day we had a close below the low of the high day. My drawing tool doesn't want to work properly. Let's blame it on the drawing tool. Let's not blame it on the person holding the mouse, right? Okay. Yeah, so NK, I hope that makes sense. So now let's go out and look at some examples on our chart. So if you want to look at a bearish example, and in all honesty, full disclosure here, I was having trouble finding current bearish trading examples, because it's not that there are stocks that are not moving bearishly, but if we come and we look at Nike certainly, you know, has had its moments of late, right? So do the charts move when the market is closed? Jennifer is saying she's a total newbie. So welcome, Jennifer. And this can feel like this is a whole new world. It can feel a little bit like drinking out of a fire hose when you first get started. And all I can say is keep coming back. And somebody in one of there was a survey yesterday, and their comment was 2 weeks ago or 2 months ago, I couldn't even follow your cursor. And now I'm, you know, can keep right up. So just know if you keep coming back, it will get easier. So if we look at this as an example, this came down and then we had this, you know, support level established, right? Because it started to go up and it went up. And if we're looking, remember, if it's bearish for a close below the low of the high day, did we get that on this day? No, it didn't close below that day. Did we get it on this day? Nope. We didn't get it until this day. So this day would have been our close below the low of the high day. And so if we had entered the trade on that day or set something up, you can put in a conditional order and say, hey, if it goes 20 cents below the low of this day, I'd like to buy a put. And so had you done that, you would have been a pretty happy camper, because it came down, only rallied for one day, and then kept on going. And then, you know, our next support level was really here. And it started to go up. And then what were we looking for? A close below the low of the high day. Well, that didn't work out so well because it really gapped down. But this day would have been our close below the low of the high day. Okay. So there's an example on a chart. Now let's look at a bullish example. So, and there's a couple, well, there's more than a couple out there. So if we look at JP Morgan, and, you know, we can see that over the last year, it's been uptrending. And then along with many other things in the market, it kind of had this great fall. And, you know, since really it hit this bottom back on April 8th, when a lot of other things hit their bottom too, do you notice a pattern? Like we've got these, and they're not perfect, but if we start drawing some lines here, you know, do you see a kind of a bull flagish pattern here? And then it came up, and then it came down day. And then do we have a close above the high of the low day here? This would have been our, so let me do our close above the high of the low day. We would have had that on this day right here. And then if we came in, if we had a swing target, would it have hit our swing target around 249? Yep. And then it came up, pulled back for how long? One day. Then the next day, did we have a close above the high of the low day? No. Did we have it here? Yes. So that would have been considered an entry. And then it came up, pulled back for how long? Kind of hesitated. We had a day of hesitation here and here. This is called a tombstone doji pattern. And what you're waiting for confirmation that this may be pulling back is for this candle to close below the body of the previous day. Did we have that? Yes. And then are we seeing, you know, a close above the high of the low day? Well, this candle is still live, but it looks like it. So could this be another entry? And then what might a target be? Well, it could be our swing target around here, around 270. Or we could measure the length of this this flag and say, we're going to make this our target. Okay. So John is saying, to confirm, you're saying a hold is bullish and a kablode is bearish. That is what I'm saying. You've got it. You are 100% correct on that. Okay. Okay. Yeah. So Jennifer was asking if stocks move after the close, and you'll see often, if right after the close, if there is an earnings announcement, you'll see sometimes a lot of movement. And if you go to a 1 day, 1 minute chart, you'll see how they're moving in the after hours. Okay. So when we see this happen, so, we opened yesterday at 265. We closed at 261, and now it's trading at, it opened at, it's basically trading not above the high of this candle, but it's trading above the high of the body. And so if you said, well, this is looking fairly bullish to me, I'm going to go ahead and place a trade. And this previous high here was 269.52. And so if we said, I'm going to do, and this is called a swing trade, I'm going to buy a call and I'm going to sell it if and when it comes up to 270, this previous high. It was 269.52. So I'm just rounding. So if we come to our trade tab and we say, okay, well, to buy the 265 call, and this is 31 days we're going to be in this, and we want to be in this at least 3 weeks plus the number of days. Now we're thinking we might only be in this trade for 4 or 5 days. So here we've got over 1 million shares a day traded. We have a lot of volume. Open interest is the number of contracts already on the books. There's already 6,603 contracts and another 131 contracts traded so far today for the June 20th 265 strike. And so we want to buy, and we're going to do, and this is an option. We're going to also do a stock example, but actually we want to buy custom, and we're going to do an OCO bracket. So we're going to make this a market order because we don't know exactly what this will be worth. But what we're saying is, I'm going to bring up this conditional order and say, hey, when JP Morgan goes at or above $270, which is the previous high, I'd like to sell this call. Oops, I just wanted that to be 270. And if this option loses half its value, so, it's 350, say if it gets to 355, that's about half its value. I'd like to take my money and go home and live to trade another day. And so when we come to confirm and send, this is saying, hey, I'm buying a call because I'm bullish, and I want to sell it when it gets to 270, or if it comes down, if it loses half its value, I'd like to, take what's left of that premium and go home. And what this is saying is you can make an infinite amount here. So yeah, well, it looks like I'm in good company. Somebody said, that Cameron did a trade with JP Morgan. Yeah. So, and we can compare this to the stock trade. Now, with the option, how much might that option be worth? Well, we don't really know, but one of the ways we can estimate or guesstimate is we can come here and the first thing you do is hit reset. And then we could say, hey, let's say by Friday of this week, it goes up and it hits 270 a share. And right now it's at 265. We aren't going to worry about volatility changing or any of that. We're just going to say if it goes up $5 a share. Okay, it would have to go up $5.05, but we're close. If it went up $5 a share, it would hit our target and we would be out. And so we paid about $7 to get in. It would be worth maybe $9.70. And so, we might make $2.70 a share or $270 on that contract. And, what is that as a percentage? So if you took $2.70 and you divided it by 9, that'd be about a 30% return. Now, could we just buy shares of the stock? Absolutely. We could buy shares of the stock and put the same target. But the percentage, if it went up $5, you're going to make $5 a share or $500 if you did that with 100 shares, but you're tying up 26,500. But what else could we do? Well, we could say, hey, this went from here. Well, we could even come from, it depends on where you want to measure from. Let's say we're measuring from here to here. So that's about a $20 move. So what if we said, okay, well, our low here was 261.93. So I'm going to duplicate this. That's, call it 262 to about 282. I'm going to make my stock target because, it can take longer. It's going farther. So here would be an example, and you could do this with an option also. You might want to go out a little further, but we could say, hey, our target here is going to be $282, about a $20 move. And so this is our flag target. And we're going to do that with the stock. And then this, the 270, this is our swing target. And we made that 270. 270. Now, where might we put a stop? Because with the option, we said, hey, if it loses half its value, we'd like to exit. Now, what about the stock? You don't want to wait till it loses half its value. Well, you might say, here was this recent low at 261.93. So I am going to take my calculator, 261.93, let's just call it 262, times 0.97. If it goes below 254, that's 3% below what we believe is a new support level, then it's not going in the right direction, is it? So we would place a stop loss. Now, a stop, it doesn't guarantee we're going to get out at the price requested, but it will generate a market order to sell the stock at the next available price. And then we're going to put in a target here of 282, and that's our flag target. So we're going to come down here, and we're going to come to this line now and say, hey, we want to buy custom with that same OCO bracket. We're going to buy 100 shares. Now, you could buy 5 shares or 10 shares also. It doesn't have to be 100. And our target is going to be 282. And our exit is going to be 254.14. And we're going to make both of these good till canceled. Confirm and send. So we want to buy 100 shares of JP Morgan because we're bullish, and this is based on our flag pattern, and it's a stock with a target. We're going to compare this to the long call with the swing target. And this is a flag pattern entry and target. And this is just a note we're writing from ourselves to ourselves. Yeah. Okay. So we now have 2 example trades on JP Morgan. And you'll notice that we have used this flag pattern to determine our stop loss order on the stock position. We've used the length of the flag to determine our target for the stock. We use that, it's created this new support level. So that's created our entry. And then on the swing target, we use that for the option trade. Okay. Now let's look at another one. So let's look at Boeing. So Boeing, this is even clearer. And this is a stock that had been going sideways for a long time, since last July, the end of July. It had been in this big, almost like a triple bottom or a huge double bottom kind of pattern. Do you see that? And then it broke out. And do you see these flags? All of a sudden it starts, moving to the upside. And, the most recent one, it came down, kind of hesitated here because this had been acting as a support level or a ceiling, a resistance level since last July. And then it came up and it pulled back. And then we had that doji pattern. And, with that doji pattern, what you want to wait for is, it to close above the body of that candle the next day. That's what you're looking for. Oops, sorry, let me close my drawing tool. And did we have that the next day? We didn't. It actually closed a little bit lower. Do we have that today? Do we have a close above the high of the low day today? Given if this were a candle pattern at the end of the day, we would. And so, now a swing target, it's already at 207. For a swing target to be 209, you might say, that's just so close, it doesn't make sense. So maybe you say, well, hey, it kind of went sideways. It was kind of like this bull flag and a stiff wind here. Maybe I make this my target here. From here to here. And if that's $23.85, and I look at this 202 level as this recent support, new support, and you add $23 to that, we'd make the new target $225. And you could do that again using a stock position or an option. And then where might you put a support? If this is support, where might we put our stop? We might say, well, if it's 202, I'm going to multiply that by 0.97. So my stop is going to be at 195.94, and my target is going to be 225. So if I come out here and do this as a stock trade, again, I'm going to right click, buy custom with an OCO bracket. My target is based on the flag pattern 225. And the exit is based on this new support, which is at 195.94, 3% below that. Now you could make it 5, you could make it 2, you could make it whatever you want. Make that good till canceled, and away we go. So we're buying shares of the stock. We want to sell when it goes up by $17.72 a share, or if it goes down by $11.34. And we're going to put that in our stock with targets. Now, what if you're saying, hey, I have a smaller account. I can't afford to buy $20,000 worth of stock. Well, one, you could buy 2 or 3 shares, but could we look at this 202 support level and maybe do, a short put vertical. Could we do that? We could. And the idea with a short put vertical is we're saying, hey, and again, we're going to switch this back. We're going to say, we've got a 68% chance of this staying above $200. And so we're going to sell a put that will be profitable as long as it stays above $200. And in order to define our risk, we're going to buy a put below that. And there is an example trading plan in that trade management mini session. So we can compare this to our stock position. And this is a larger account. So if we said, hey, we're willing to risk $2,000, we could do 5 of these. Now, if you have a small account, you might say, hey, I can only afford to do 1. I don't want to risk more than $500. And we're risking $384 to just do 1 contract, $385. So we can compare this, but this is less directional. As long as it stays where it is or above, we're going to be fine. Do I not have a short put vertical group? I may not. Oh, there we go. Okay. And we're going to compare this to our flag target with the stock. So we did 2 example trades. Both our example trades were bullish, actually, and we did 4. We did 2 on Boeing, ticker symbol BA. We did 2 on JP Morgan, ticker symbol JMP. And if you want to practice this, just go out and pull up some other charts and just look at the patterns. So do we see a potential flag pattern here on Meta? Now, we don't have a close above the high of the low day yet, do we? But we have this flag pattern setting up, a flag, another flag. How about TSL? It, again, like so many other stocks, it kind of had a great fall. Flag, another flag setting up. Do we have an entry yet? Do we have a close above the high of this low day or above the high of this day? Not yet. But, it's one to kind of keep an eye on. How about Crocs? Don't mock the Crocs. So, and again, here we have something that was in a sideways range, bull flag, pulling back, but do we have a close above the high of the low day yet? We do not. So are we waiting? We be waiting. Yeah. Dollar Tree, I think that was another example. So just get out and start looking around. Okay. So guys, that's a wrap for today. We looked at bull flags and bear flags, how we can use those to determine targets and entries and exits. And I hope you found this helpful and informative. Again, please don't forget to subscribe to the channel, hit the like button. I believe there's also a survey in the chat, and Brent was kind enough to repost that a couple of times. So here's the deal with the survey is that if you click on that link, there are 2 questions. 1 was I hated it, 10 is I loved it, and then there's everything in between. And then you can put comments in. So if there are other topics you'd like to see me cover, if you'd like to see more examples or less, or, my promise to you is whatever you type in there, I will read, and so will the management team. And so you have a voice. If you're watching this in the archives, you don't have access to the surveys, but you can type something into the comments below. And actually every comment you put in helps raise this in the algorithms. And when you hit the like button, it does the same thing. So you could be doing a favor for a stranger whom you will never meet and helping them find this content that Schwab offers with our compliments. So guys, that's a wrap for today. Don't forget to follow us on X, Barb Armstrong CS, Brent Moore CS. Have a really great rest of your day. Stay tuned. Up next is Mr. Michael Fairborn, I do believe, with Swing Trading. Have a great day. Thanks to Brent in the chat and the people behind the scenes who helped bring this class to life. Take care, everyone. Bye for now.